Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news markets see a cooling US labour market in signals ahead of this weekend's August non-farm payrolls report. But first, yesterday we mistakenly reported that US retail sales from 2 weeks ago, up 5% at physical stores from a year ago. The actual result for this metric for last week was very much more positive, up 6.3% from the same week a year ago. Its best rise since the end of 2022, when a very low year ago base boosted results. This current result is actually quite impressive. And US exports hit their highest level ever in July at $267 billion. Imports rose too, but not to a record level. Their full trade deficit rose to $79 billion for the month, but that was well short of records set during the pandemic. This deficit continues to be quite small in relation to US GDP. And US factory orders were solid in July. New orders rose 5% from the previous month, above market expectations of 4.7%. New orders rose by 9.8% for durable goods, lifted by transportation equipment, which was up more than a third. But there was a sharper than expected drop in July job openings in the US. The number of job openings fell by 237,000 to just under 7.7 million in July, from a downwardly revised 7.9 million in June. That is the lowest level since January 2021 and below market forecasts of 8.1 million. This is the first real sign of a cooling labour market there, although the new order data may make that a temporary dip. This is the data that has the financial market's attention today. And as expected, the Bank of Canada cut its policy rate by 25 basis points early today to 4.25%, its third consecutive cut, saying excess supply in the Canadian economy continued to put downward pressure on inflation there, which is now running at 2.5%, its lowest level in more than 3 years. And Bloomberg is reporting that China is considering cutting interest rates on as much as $8.5 trillion worth of mortgages in 2 steps to lower borrowing costs for millions of families while mitigating the profit pressure on its banking system. And Australia said its GDP was 1.5% higher in its June year after a smaller than expected 0.2% expansion in the June quarter. Helping keep it positive was record federal government spending on the public payroll and on their healthcare sector. The US Treasury 10-year yield is now just on 3.77% and down another 7 basis points from yesterday. The price of gold will start today up a minor $2 from yesterday at $2,493 an ounce. And oil prices have held from yesterday's lower level at just under $70 a barrel in the US, while the international Brent price is still just on $73.50 a barrel. And the Kiwi dollar starts today unchanged from yesterday at 61.9 US cents. Against the Aussie, though, we're nearly 20 basis points higher at 92.3 Australian cents. Against the euro, we're 20 basis points lower at 55.9 euro cents. That all means our trade-weighted index starts today at 69.9 and down 20 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.